I would think that you'd see a lot of the people unwinding some positions and taking profits in their assets, and maybe moving into more high risk plays, or in the situation we talked about, paying back loans in foreign currencies. So that's like kind of why I think this is having such a strong impact on both American and Asian markets, is because the two sides of the ball are going different ways.
Bank of Japan just announced that they are not going to be increasing their interest rates. For those at home that are trying to figure out, okay, how does this impact my portfolio? Or if you're building in Web3, how would this potentially impact Web3 and the industry that I work in? Let's just kind of take a step back and try to understand like what exactly is the yen carry trade, and then maybe we can talk about what are some of the things that could potentially impact the future of Japan, United States markets, whatever the case may be.
Yeah. So I think just to, like you said, to step back, to kind of explain like the carry trade concept. So the whole concept behind a carry trade is like you're trying to borrow at low interest, and then you convert what you borrowed into another currency, where you think you can get a higher rate of return. So typically, in this scenario, I guess not typically, but in this scenario, it's the yen, which has had about a 0% interest rate for almost the past 2 decades, right? So it's very cheap cost of capital to borrow the yen. So what a lot of people have been doing over the past, many years, and especially with the rates in the United States going up, is that they've been borrowing the yen, and then converting that into US dollars and then investing it into the broader markets. And that could be things like bonds, stocks, even real estate. So that's kind of like the overall concept, is just borrowing at low interest, keeping a low cost of capital or cost of borrowing, and then repurposing that into other things that you think you can get a better rate of return on. So, as you can imagine, with the way that the U.S. markets have been going, including real estate over the last many years, I'd say, there's been a pretty sizable amount of profit probably driven in this type of trade. So that's kind of like the overall um, idea behind the carry trade. And then you kind of mentioned the interest rates, and so I think that really did have a huge impact on why markets were moving so much. Um, you know, Japan, like I said, has had a 0% interest rate for the last almost 20 years. So when they move and they create a situation where they're actually increasing rates, that's notable to a lot of investors. And I guess to take a step back from that, when with interest rates and currencies, they have a very direct relationship where when interest rates go up, typically that currency will strengthen. So in Japan's case, when they raise interest rates on the yen should strengthen in terms of its purchasing power. So when you think about borrowing and with cost of cat or with the cost of borrowing there, when you borrow and the yen goes down, let's say in strength, you're actually paying back less when you're going to convert your US dollars. So it's really good for the investor. But when that scenario switches, it starts to create this situation where now you're paying back your borrowings becomes more expensive. So with Japan raising rates, that's one piece of this puzzle, where investors are probably saying this should create a situation where the yen's going to gain strength. Therefore, our cost of paying back will be more. And then you look over in the United States side of things, and we're announcing from the Fed side that they're expecting rate cuts. So again, that should lead to the devaluation of USD. So now you have both sides going the opposite way. And when most of your money has been converted from the yen into USD, you now think, okay, my US dollar value is going to go down while the yen value goes up. So your profits go down and your investments go down while your borrowings and loans go up. So that's why I think we saw a decent amount of panic, is people unwinding and really taking profits. That's the core of, I think, of what really caused a lot of panic.
This is very interesting to explore this topic because typically everyone's looking forward to the interest rates going down in the US market, right? Because as you mentioned, that decreases the value of the dollar, which typically correlates with the crypto market doing really well, especially the high risk assets.
Yep.
So everyone's kind of looking at the Dixie and wondering, when is it going to go down and when is it going to hit certain levels, because that typically translates to going to the moon in crypto. But with that caveat now being the whole Japanese yen situation, I mean, we're obviously not, we don't have a crystal ball, but what do you personally think would happen in the scenario if, United States decides to, drop 25 basis points or even 50, like they're talking about doing. There's like a 60% chance as of, recording today.
Yeah. I mean, who knows what will happen and how the market will respond. But I would think that you'd see a lot of the people unwinding some positions and taking profits in their assets, and maybe moving into more high risk plays, or in the situation we talked about, paying back loans in foreign currencies. So that's like kind of why I think this is having such a strong impact on both American and Asian markets, is because the two sides of the ball are going different ways. So as we announce these type of cuts, it's great for borrowers in the United States, right? Like we know that many people have complained over the last couple of years about how expensive it is to get a mortgage or a car loan rate, and that's mainly because rates are up. So as they go down, that's great for the consumer side of things, but from the investment standpoint, it could lead to a devaluation of the overall equities market, and therefore people will likely want to move their capital to places where they feel safe. Hopefully, crypto is that place where they want to go park their money and take the risk on these high risk assets. But yeah, I guess time will tell. And to be quite honest, with how much rates have accelerated over the last 3 or 4 years, I don't know if a 0.25 basis, or 25 basis point cut is really going to have a huge impact. I think it's going to have to move a lot more before it becomes significant. But who knows where the Fed's going with that? I mean, they could do a 50 basis point cut right off the bat and start to indicate it will be a fairly quick decline. So that's definitely something I'll be keeping an eye on.
Some of the banks were offering like close to like high 5%, which is like unheard of these days. So, you know, I do think that once we get under 6%, I think that's where the real estate market will start to move again. But it remains to be seen what we'll do. But something that's obviously alarming, in a sense, the impact that Japan has on the world market, and we don't know. For now, they're staying put, but we don't know what's going to change tomorrow. They're waiting for the volatility to die down, but at what point do they say, "Look, we don't really have another choice. Well, we have to go ahead and take action here."
Yeah, and that is the crazy part about where we're at today. It's the world is so globalized that the Japanese markets do have a heavy impact on the United States, and the reason is to what we spoke to earlier. Um, there was this incredible opportunity over the past 2 decades to borrow very cheaply in Japan and repurpose those assets in U.S. markets. So if that's coming to an end, then yeah, there's going to be a lot of unwinding happening where people are going to have to sell off either their equities or real estate investments in order to cover those borrowings. So even if Japan doesn't increase the rates any further, that's probably a good thing. It probably slows down that process. But so long as the United States continues to indicate that they're going to keep lowering rates, then I don't see this problem necessarily going away. And I do think the markets will continue to kind of climb back down to more reasonable levels. I mean, I know personally over the last couple of years, I've been blown away by how much the market has continued to set new all-time highs. I thought we were in for a somewhat of a retrace almost a year and a half ago. So I've been sitting here for a while, kind of sitting on a lot of cash, putting them into those high yield savings, and just waiting for my opportunity to re-enter the market. And it started to feel like it was never going to come. So I do feel like this was something that's been kind of kicked down the road many times. And now we're starting to see the actual impacts of what was happening over the last 5 or 6 years, but even the last couple of decades. I read somewhere that there was somewhere around $20 trillion of assets or basically borrowings that have been utilized in this carry trade. So that is a fairly significant amount of capital that has moved, which means that's eventually going to need to be paid back. And if Japan continues to raise rates or even stays where they are and the yen continues to strengthen against the dollar, you'll see a lot of people thinking about, unwinding and paying back those borrowings before it gets out of hand. So there's a lot of moving parts in this, but yeah, I think it all kind of comes back to the same concept of we're likely going to see some sort of pullback in the U.S. equities market. How soon and how quick that will be is very much unknown to me and everyone else. So yeah, that'll be something to definitely watch out for and keep a close eye on if you're heavily invested in the markets.
I do think that for crypto itself, there's still a lot of positives right now. When you look at, the employment situation, jobs are still on the rise, right? Even though it's slowing down, it's still on the rise. The banking sector is fairly strong. and just the overall economy. I think it's still good. We're not really, seeing any signs of recession on like a large scale. And so also when you look at the fact that BlackRock is still buying or holding, not selling any of their Bitcoin or Ethereum, I think that bodes well for the crypto market.
Oh,
So
certainly does. Certainly does.
yeah, so I don't think that some of these other points are really making headlines right now because everyone is so focused on this unwind. But I think it is something to note. And I don't know about you, but I've been trying to take advantage of the current situation. Obviously, not financial advice, but have you been buying the dip?
I have been. So I had a little bit of capital basically sitting in USDC waiting for some pullbacks. So I was kind of buying a little bit on the first couple, I guess like downswings, and then this most recent one that occurred the other day where we saw like the 20-25%. I definitely started to deploy a little bit of capital at those levels, fully understanding that it could go another 20% down from there. But I felt like at the levels I was seeing, there were levels I had not seen in a very long time. And I felt very comfortable with my entry points on some of those assets. So I was certainly deploying during that downtrend, but I'm not ruling out that we will see another wave, and this could just be more of like a as they call it, like a dead cat bounce, where it gets people back into the markets, get them thinking that it's swinging the other way, just to crash right back down and create another lower low. So I'm definitely aware that that is a possibility, which is why I still have a little bit of capital on the side, waiting to potentially enter again. But that's something that you can never predict, and there may not be another opportunity to enter in. So that's why when these do happen, I do like to at least allocate a little bit of capital, so long as I feel like the prices are in a range that I would feel comfortable holding long term.
Last question for you, Max. So, what are those assets that you decided to take advantage of?
So I'll share a couple of them because I've been kind of posting on Twitter a little bit about this to give people more insight to what I'm looking at. One that I've really like been starting to move into is Aave. When I look at their fees being generated, it's substantial, and their expenses related to basically getting those fees are very low. So they're actually producing like a net profit as a application. So to me, that's very encouraging. There's a handful at most in the entire space that are generating profit. So Aave is one that I think will have a strong run during the bull market. And then a couple other ones I've been looking at is like Ondo. That one, a lot of people will say is overvalued. And I would agree from a fundamental standpoint, their fees and incentives, netted against their incentives are not producing a net profit. And it compared to their market cap, it is not a great ratio. But I do feel that they have very, very strong backings. I believe BlackRock is one of their backers. So to me, those are just strong cases or qualitative cases for why I would want to have a little bit of a position in that. But then other than that, I'm just looking at fundamentally like what products are generating fees and where I can see them continuing to improve their net profits as things like incentives dwindle down. So I'm looking at things like Maple Finance, which is a lending protocol. Um, I'm trying to think of a few others that I was Goldfinch, another one where it's like a RWA lending protocol. So trying to really stay mainly allocated to these bigger protocols that have good reach in terms of people knowing who they are, but then also producing good fundamentals from fee generation and having a path to profitability. And so long as I can see that down the road, I'm comfortable taking positions. But yeah, those are a few of the ones that I've been looking at most closely. And then you look at a few others like Jupiter, Jito, Orca, a lot of these Solana projects that are also producing very significant fees, but again are very volatile. So it becomes a little harder to determine where that entry point is, but keeping close eyes on those.
All right, so you got a few applications on Solana, but you sticking to the OG projects like Aave and real world asset projects like Ondo, and I think you mentioned Maple Finance and Goldfinch.
Yep. Yep. Those are big ones. And then I am still looking at the DePin sector quite a bit. So Jackal's another one that I continually try to cost average into, especially on dips. Same with Akash. That's another one that I'm very excited about and see GPUs and AI being a major narrative in the next bull run. So I think Akash is actually positioned very well in that sense. So yeah, I mean those are a good list of the ones I'm looking at, and I'll probably put a tweet out soon on Twitter that will kind of give a little bit more insight into my larger kind of watch list. I don't own necessarily all of them right now. I might be waiting for an entry, but they're the ones that I'm most likely going to be entering a position in at some point.
I'll be sure to include your Twitter link in the description. Max, as always, real pleasure. Thanks so much for sharing your insights. Until next time.
Yeah, always a pleasure, Mikhail. Talk soon.